forward. Okay, let's delete everything. All right, so your guys' homework from last week was simply just to practice identifying first low. As we know, it comes from every bullish range, and it is the move that gives us the pivot, the first pivot after a bullish range is formed. So here, bullish range, first low here, because we have that pivot. As we break the first low, we have manipulation here. And ideally, we want to look for a push to the upside. Now right here, new bullish range, created from this low to this high. From there, we have first low here. Now the active price breaking that first low and pivoting up is considered manipulation, and so forth. So overall, you guys are doing a pretty good job at identifying first low and manipulation, which that's good. I didn't think you guys would catch on because you guys had a pretty slow start compared to most groups, but I see you guys are starting to catch up now, so that's good. So today what we're about to get into is pretty much the opposite. So we went over bullish structure and how all that looks with first low or whatnot. So now let's start talking about bearish structure. So within bearish, it just got slow in a nice way. Yeah, something like that. Every single group moves at its own pace. Like the fastest group that I've had, we finished the mentorship in 3 weeks. And everybody, like I'm telling you, was like on it like crazy. But I don't know, everyone's different. So with bearish structure, I'll see this over here. So with bearish structure, we know it's made of lower lows and lower highs. Every time a low is broken, we get a structure break to the downside, just like that. So if we just math this out, this is what a bear structure looks like. No, I'm telling you, I don't know why. Every time I hop on Zoom, it's like they just want to make a lot of noise. It happens all the time. So all these blue areas are bearish ranges. As we can see, every low gets lower, every high gets lower as well. And the blue lines that are being broken is considered a structure break. So everyone understands this, right? We all remember this. Okay, perfect. Yep, new range. So every time a low is broken, that gives us a new bearish range. All right, so let's do this right here. What is this a representation of? This diagram right here, what does this show us? Yep, so we got bullish range, and what else? Yep, bullish range, first low, manipulation right here, sends price up just like that. So this is what it looks like in a bullish range. And just remember, when we talked about, when I first showed you guys what a bullish range looks like, just like this, if we flip this upside down, that's a bearish range. So if we flip that first low bullish range stuff upside down, wait, where'd it go? This is what we have here. Bearish range, Now, instead of a first low, the first high that is made after we have a new bearish range. So the first high, instead of first low, we're looking for a first high. Bearish range created, first high, look for the manipulation of the first high, and then look for the push down, just like that. So it's the exact same thing as first low, just flipped upside down. So instead, we're looking for a first high. So then this is what it would look like if it was first low. So if we go to, let's go to Tesla, see. Let's find a good example on a higher time frame. Still bullish, higher time frame. Let's go to daily. All right, here's an example right here. So we can all agree this high right here is our highest point. We can see this highest point came from this low here. So once this low is broken, this gives us a what? What's this blue line represent? Yep, market structure shift to the downside. So then, once we have that, we have our first bearish range. So our first bearish range is from this high down to this low here. Now, here we have our first push to the upside, so our first pivot. This line here is going to be considered our first high. So we just put FH. Now, the act of price breaking that first high, just like this is where the manipulation comes in. And then you can see here, we got a clean push to the downside. Just like that. So draw this in a diagram. It'll look like this, bullish range, shift to the downside, first high, manipulation of first high, push lower. So let's pull this up, and now let's see how this all kind of works out. So it's in this diagram. Bullish range, first low, manipulation here, just like that. First high, manipulation, push down. So let's say this is price action for just one day, right? And let's say overall, throughout the day, the stock is down. So let's say on the day, let's say it started here. Let's say on the day, the stock is down $4. Now, with everything that we know so far, there's opportunities for a lot of stuff. There's opportunities to play calls off this first low manipulation. There's opportunities to play puts off this first high manipulation. So earlier, as I said, how there's a lot of opportunities to play, whether it's calls or puts. You just have to be able to understand what you're looking for. So like me personally, I really only trade off of first high or first low manipulations. So this would be an example. So here, I would not be looking for a trade until we had the manipulation and pushing up. I would not be looking for a trade until we had the manipulation and starting to push down. Okay, so we're gonna go through some more examples. Let's let's look at NVIDIA for today. Let's see what we have here. All right, let's look at this. So right over here, bearish range to the downside. First push up. So you have to look at the overall move. So as I said before, don't get so caught up on looking at it like, well, this candle went up and then we went down and then this candle went up. Just look at the overall move. So you have all these bullish candles to make this high. So right here, we have a first high. So bearish range, here to here, first high. And then as you can see from this, pretty much we have just a continuation of our bearish range. And then price comes all the way up here to manipulate this first high. So some manipulations might just be as clean as one wick and then a push down. Some might be, we go up a little bit higher and then flush. So this is just an example of that. So then all within this area, we have manipulation. Here we have a clean push down. Now remember, the manipulation from a first high does not always have to send us to the depths of earth. We're just looking for a clean move. That's it. We're not necessarily looking for, price to go to zero or anything crazy like that. So wait for the push in your direction after manipulation. It's not, because then at that point, then you're starting to talk about entries, but we'll talk about that later. I see we also create a new structure break after that first pivot when our first low change. So we're not looking at first low right now. We're looking at first high. So yes, even though we do get a lower low here, so boom, lower low right here, this also would be considered a first high. But at the end of the day, this is a first high as well. So let's say we go to, let's say something like this. And this is why it matters what time frame, because every time frame is going to show something different. So if we're looking at it on a 4-hour, we have boom, there's our low, here's our first high. Here's our first low manipulation, there's our push down. On a 1-hour, we're obviously going to see more because we have more price action to go off of. Let's do another example. Yeah, price action hasn't really been the cleanest lately. So it's a little hard to spot these out afterwards. So I'm gonna say QQQ today. Let's see what we have here. Market structure shift to the downside. There's our push down. Here's our first high. Price comes up, runs our first high. And we'll talk about this later, but essentially we have price coming to this here. We'll get into that later. see if there's another clean example. Oh, here we go right here. So this is on a daily time frame. So here, say the break of this low, shift to the downside. This low makes this high. Right here, this whole gap down, there's our shift. Right here, this black wick is our first high right there. Price runs up all the way to break our first high, and then here you can see we had a clean push down. So I think this was Friday, yep. So if you guys remember on Friday, we had that huge dump to the downside, and this was a first high manipulation. Just like that. So with looking at this here, right now, price is bullish once we broke this high. So we're pretty much in this range here. This is our range that we're in on a 1 hour. So we don't have any first highs within here formed. Let me see. I'm trying to think of a stock that's pretty much bearish right now. Okay, here's an example. Clean push down, first high. And let's see what this looks like on a higher time frame. Structure break to the downside. Here's our low. There's our first push up. So this right here is our first high. So an example of manipulation would be if we came up here and then manipulated it here and then potentially have a push down. This would be an example of a first high manipulation. Any questions so far? All right, let's keep going. Do you look at your trades for entry? Yeah, so the first step, like really, when it comes down to really understanding, we'll get into this later. So this would be an example of like day trading. Go to a 4 hour and see where, or see if price is near any manipulation, a first high or first low. Go to 1 hour and do the same. And then if so, map it out, see what range price is in within a 1 hour time frame. Four and later, that's stuff that we haven't talked about yet. All right, so quiz you guys real quick. Okay, what does line number 1 represent? All right, yep. No, I saw someone say first high. So number 1 represents nothing. So we'll delete that. What does number 2 represent? Oh, someone said first high. Someone said first low. Okay, looks like we're all over the place. Number 2 is a structure break to the upside. Bullish, bullish range, structure break. What does number 3 represent? All right, see a lot of different answers. Saw market structure shift to the downside. See first low. Number 3 is our first low. The first low that comes from a bullish range, that is our first low. Now, what does number 4 represent? Market structure shift to the downside. This is the lowest point. This is the low of that last bullish range here. Once that's broken, that's a shift to the downside. Now this red area over here, that's going to be our manipulation. Now, number 5, this line represents what? Seeing a lot of structure breaks to the downside. Okay, so let's draw this up here. All right, so price creates a bullish range, this high, or this low to this high, right? Here we have a shift to the downside. This low comes from this high. So does that change anyone's answer? There we go. One person got it. So this would be an example of it being 2 things. This is considered a first low, and if it's broken, it could also be a structure break to the downside. You guys see that? This high gave us this low. This low also comes from a shift to the downside here. So something can mean more than one thing, but you just have to take it based on what structure actually presents itself. So then, for example, number 6 would be considered a first high. Number 7, I'll just give it to you, that's nothing. How can first low also be manipulation? If a low comes from a high, no matter what it is, that's a first low. And if this first low that is made takes out a previous first low, manipulation. So not everything is just always one dimensional. You just have to use the context that is given through the actual movement of price. This first low comes from this high. This first low came down to manipulate this previous first low. That's why that low is manipulation as well. So everything has a purpose. Like everything is engineered to work towards something. So then if here we got a structure break to the downside, and then we saw price creeping up like this, and we just continued higher, it would make sense. Because the break of this low, even though, yeah, it is a structure break to the downside, it also is that first low manipulation. So this is why I always say, when it comes to this stuff, don't always think like just because we got a structure break to the downside means we're automatically going to continue going lower. Because even though this is a structure break to the downside, this low is also a first low because it came from that high. All right, let me go to another stock. As you can see, this price action over the last, freaking November, December, January, February, over the last 4 months has been trash. Like, look at this. This right here is very choppy price action. Like, yeah, there's opportunities here and there, but there isn't really a clear direction. Like, one just can't say like, oh yeah, we've been bullish over the past 4 months. That's not the case. But someone definitely can't say we've been bearish over the past 4 months. This is just an example of choppy price action. So let's see on a weekly if we have anything interesting here. There's our highest point, came from this low. There's our shift to the downside. Now, once we got that shift, here we got to push up. So this right here would be considered our first high. Price runs up, we manipulate this first high to make a higher point. So technically, the break of this would be considered first high manipulation. See, since we got this shift, let's go down to a lower time frame. First high manipulation, push lower. Here's our lowest point. Say here we got a structure, our market structure shift to the upside. Yeah, this is super choppy. There was our bullish range we were working within. Alright, so right now, where price is, trading within this bearish range here. So right here, we got a shift to the downside. As we broke this. Right here's our first high. So possibly we see price come up, take this first high, push lower. We just have to wait and see. But right now, pretty much based on where price is, this is pretty much a mess. Confused about bearish? What about bearish are you confused about? Right out, Manny. There hasn't been manipulation here yet. But right here, there's our shift to the downside. There's our first high. So if price breaks that, that's manipulation. Yeah, we're not done right now. We definitely got some more to go through. Let's do, let's look at crypto. Let's see. All right, so just as I showed you guys last week with the XRP, bullish range, first low, break of our first low, push up. Now, once price broke this low here, that was our shift to the downside. So if there's our shift, there's our push up from it. So therefore, this is our first high here. On a daily, if we go down to a 1 hour, it's a little bit different. Let's go down to a 15. Okay, so obviously this here is our lowest point, and then our first high is going to be all the way up here. So that blue line, that's our first high. So the reason why when I bought XRP a couple weeks ago or whatever, I didn't hold this thing. As soon as we started breaking this high, that's when I got out of XRP. So I bought it around here and I just held it for a day, sold it as we were approaching this because this right here is first high manipulation. And then as you can see from there, almost a 20% drop. And we pretty much just are consolidating from there. This example, is this clear? Lowest point, first high, manipulation, start dragging down. Just go to Bitcoin. I like trying to show actual live examples rather than just like old screenshots from something that was like a month ago or whatever, because I want you guys to actually be able to go to this and map it out for yourself. See, Bitcoin is a mess too. Everything is very, very choppy. How do you show the percentages? That is on the price range, just like that. List some stocks in the chat. List some random stocks in the chat. Trying to find something that's clean. Yeah, I mean, Jesus, literally everything is so choppy. Like, we'll try to make, so let's see what we can make out of this. Let's go to, all right, let's look at this here. Bearish range. There's our first push up. Right there is our first high. Now with this here, actually, I guess we could start going into the next topic because this is gonna kind of help it make sense. So there's our bearish range. I'm just gonna highlight it with these. Bearish range here, first high. First high manipulation, and then we can see price goes up a little higher before we dump. So when it comes to, and just remember this here. So just like that. So when it comes to first lows and first highs, as I said before, when price goes to manipulate something, always look for price to bounce off of one thing. So just pretend like a first low or a first high is a magnet, and we're looking for a trampoline to bounce off of. So an example, this would be a bullish, and this would be a bearish example. So as we can see, just because we got manipulation right here, we didn't shoot up right away. Just because we got manipulation as soon as we broke this, we didn't shoot down right away. We went a little higher. So we need to understand where one of these trampoline areas can be at. That's gonna send price higher. And that's where we start getting into, for a bullish structure, demand zones. So a demand zone is simply a price, or not a price, but an area at which price will go to and use as a trampoline. So this all comes from area at which price go to so it's up from. There's going to be flash bearish candle, before structure break to the upside or market structure shift to the upside. So let's just pretend these are all candles. Say we have this here. Let's say this gives us a structure break to the upside. Let's say our last bearish candle is here, and then we get all bullish candles. We're gonna highlight the whole bearish candle, the whole last bearish candle before we got that structure break, and that whole thing is gonna be our demand zone. Now, ideally, it's not gonna happen every single time, but just ideally in a perfect world, we wanna see price come down to the demand and then use it as a trampoline to push us higher. So if we had an example of a first low, and this is always gonna be in a bullish range. So demand zone, bullish range. So if we had a first low here, and then let's say we have a demand zone here, ideally in a perfect world, we would wait for the manipulation to happen and wait for price to get to demand zone and then expect price to come up from there. And that's why I always say, just because we manipulate first low, don't buy right away. Because if we come all the way down, let's say this demand zone is 69 cents away, you're just taking an unnecessary loss. When you could have just waited for price to get to demand to then start to catch price moving higher. So if we go back to here, let's say we're in a bearish range. Let's say here's a structure break. So now our new bearish range is this high to this low. Let's say here we get a bullish candle. This gives us a market structure shift to the upside. This is the last bullish candle, before, or not bullish, but bearish candle before we got that break. So this whole thing is going to be our demand zone. Just like that. We're going to go through a lot of examples. Nope, the size does not matter. So here's an example right here. Let's say we got a market structure shift at the break of this yellow line. This whole candle, this whole black candle is the last bearish candle we have. So this whole thing we're gonna highlight, and that's our demand zone. So ideally, we wanna wait for price to tap into it before we start seeing price go higher. So now let's go back to some of the first low examples that I originally showed you guys. Let's see if any of them are here. All right, here we go. Oops. This low to this high, bullish range. That gave us a structure break to the upside there. So on a higher, obviously this is on a 5 minute, but on a higher time frame, this whole area is the demand zone. And then there's our first low. So I waited for price to come all the way down to manipulate our first low, tap into our demand zone before looking for price to go up. Over here, same thing. And this is on a, this probably isn't the best example for this time frame. Okay, yeah, this is better. Structure break to the upside here. This is the last bearish candle before we had that structure break. There's our first low. Waited for the manipulation to tap into the demand zone and then caught the move up. So it's the entire candle from the bottom to the top. So when it comes to the time frames, let me see, where's the slide at? So for day trading, our main time frames is 15 and 1 hour. So I'm really only looking for like demand zones, first lows and whatever on a 15-minute and 1 hour. That's it. So 15-minute and 1 hour for day trading, we're using those to configure our structure. And then everything other than that that's lower, that's for entry bias, which we'll get to in a separate meeting. And then from there. So like here's an example of manipulation, but when price did not go to a demand zone. So our demand zone is down here. As you can see, price did not go to our demand zone, but we shot higher. But I'll teach you guys in a separate meeting, another meeting in the future, on why this happens and where you can also spot or really wait for price to go to. So like, you'll have some instances, you'll get something like this. Say this whole thing is demand, first low, push. And then some examples, or some instances, you'll have something like this. Just like that, and let's say your demand zone is down here. Now, in a bullish range, once manipulation occurs, or not manipulation, but once a first low is made and price is coming back down, within a bullish range, there's multiple areas at which price can continue to. So let's say here we have a bullish range, and let's say price is heading down. Think of it like this. There's an area here at which price can use to move higher. There's an area here at which price can go to and move higher. There's an area here. Oh, that's a bad drawing. There's an area here at which price can move to and go higher. Our job is to figure out which one we are going to use. And there's a way to do so. And that's what we're gonna, kind of start learning throughout this whole thing. So let's try to find some examples of this right here. Oh, this is gonna be good. This is gonna be good, I think. Does everyone remember Roku, the very first example we went over when learning structure? Okay, full circle moment here. Now that we learned a little more. So this is our first bullish range. Here to here. There's our high, price comes down. We make this first low here. First low. Price comes right down to this demand zone here. Push higher. So then over here, there's the first low. Most people at the very beginning, when we did this, everyone said the break of this is a shift to the downside. It is, but it's also the first low. Demand zone, tap in, move higher. Price broke this high, pretty much just continued structure to the upside. Right here, this black candle, last bearish candle before we break this high to make new highs. Price comes right back down to demand zone. So let's say you have manipulation here. Manipulation into demand, push higher. So we're always moving towards something. Let's go back to Coinbase. Shift to the upside. First low manipulation. Structure break there. Demand zone here, which we can see obviously doesn't get hit. First low manipulation. New push to the upside. Demand zone here does not get hit. But instead we have first low there. So this is just identifying demand zones. So based on where price is right now, here we have this demand zone here. I wish price was a lot cleaner. Right, exactly. Demand zone is more confirmation rather than just manipulation. So the first step is just identifying the first low. Then after that, we want to look to see if we come down to manipulate it, how far can we go to? Where's the trampoline at? That's the demand zone. So if there's our manipulation, there's our trampoline. So we need to identify that. Now, just based on where price is, there is not a whole lot of examples of this. Unfortunately, because price is just in a weird spot. Yeah, all this action is pretty ugly. Use NASDAQ. Yeah, this isn't any better. Not gonna lie to you. All right, here we go, right here. Structure break. Last bearish candle before we got that structure break. Demand zone here. Now, just because we have a demand zone, this doesn't always mean that demand zones are always going to be held, because sometimes we can get used like this and then just continue lower and break it. So if we break through a demand zone, no matter if it's a wick that breaks the bottom or a full candle, that means the demand zone is invalidated. So therefore that demand zone no longer is useful. Now, I just want to see if anyone can, it's a little step ahead, but I just want to see if anyone can get the answer. But let's say we have a demand zone. Let's say we have like all this structure here like this. So if a demand zone has been tapped into or used a lot, this increases the chances of this demand zone being broken. And why? So someone tell me why that is. So if demand zone has been used a lot of times, it increases the chances of it being broken. Why is that? So the reason this is because with the more structure that's presented over here, as you can see, we go down, we go up, we go down, we make higher highs, we make higher lows, whatever. We're probably creating more first lows within here. So like as you can see, for example, let's say this came up here, something like this. We had this first low originally, and we came down, manipulated it into demand, caught a move up. We can see here, we have another first low. So the more times price is using something, we're just increasing the chances of like a first low, new first low being placed, which is just gonna attract price lower into it. So if you see a demand zone that's been used a lot, kind of be a little, just think of it as like, okay, this probably won't hold up as well compared to a demand zone that is fresh, hasn't been used. Let's go to SPY on a weekly. Oh, okay, yeah, we can use this example. Here, structure break to the upside. As price comes up, we have a structure break. Here, we have a first low. Here is the last bearish candle before we got that structure break. There's our demand zone. So our manipulation came down right into demand, clean push higher. Right here, structure break to the upside. Here's our demand zone. Here we have manipulation right into demand, nice push up. Here you can see we use this demand a few more times. So if price started to come back down, I would not be surprised if this demand zone got broken. Yeah, been mitigated too many times. Pull up IWM, yeah, let's do it. All right, let's look at where we are right now. Let's go to, let's go to daily. Dang, this is ugly. This is very ugly. All right, so pretty much all of this is a bearish range. Here we get a shift to the upside. So let's break this down to a 4 hour. Okay, so based on what we just marked up on a daily time frame, the break of this high here is a shift to the upside. So if we go down to a lower time frame, like a 4-hour, without changing anything, actually this is gonna be, should be here. All right, so there's our break. Now, as you can see, if there's our break, this small candle, instead of just using this one little candle, I'm just gonna use this whole thing here, just as a demand zone. And as you can see, boom, price came down to manipulate this first low into demand, got a nice push up. But as you can see, we manipulated this, or not manipulated, but we used this demand zone quite a few times. And then you can see here, obviously we broke it. Now let's just look at closer to where price is. Here we have a break to the upside. Now our last bearish candle we got before this break technically is here. But this bearish candle is a part of this move and not necessarily this move. So there is no clear demand zone here. So we're gonna go down to a lower time frame to try to find one. Okay, this did not make it any more clear. Let's go to a 3-hour. Okay, so then I would use something like this here. I would just use this. Or if we wanted to get more in depth and just look at the actual price, we can see we pushed up, we pushed back, and then we pulled higher. So now look at the candle anatomy. And this is another trick. This is called wick demand. So you can see here, push up, we pulled back down, and then we pushed higher. So let's see what this looks like on a lower time frame. Yeah, so this is more clean. This is a cleaner move than trying to use this here, because that's a high. Then we pushed down, then we pushed up. So we could use something like this here. But overall, all this price action is just a hot mess. Bearish range here. Other than that, I don't really see much. I don't see much. Now, on the flip side of demand is, oh, so here's another structure map, by the way. And this is the Roku example. Bullish range, demand zone left behind, demand zone here, demand zone here. So demand zones are the last bearish candle before a structure break to the upside or a market structure shift to the upside. Now the opposite of this is going to be supply. So instead of the last bearish candle, it's the last bullish candle. So a supply zone is the last bullish candle before a market structure shift to the downside or a structure break to the downside. So here we can see this is the last bullish candle before we got that low. That's a supply zone. Price runs down, structure break, runs all the way up to supply, and then we push lower. Last bullish candle before we got a structure break to the downside, that's a supply zone. Price runs up to supply, and then we push lower. Now looking at this, once we make this low, what's this going to be right here? What's that red line represent? Yep, first high. So you can see here, just like demand, find the first high, wait for the first high manipulation to run into supply. Then we should expect price to move lower. Same thing here. Bearish range, first high manipulation into supply, then we gotta push lower. Another example of what supply is. Structure break to the upside, structure break, our market structure shift to the downside here. The last bullish candle before we got that break to the downside. So supply is for bearish order flow. We highlight the full candle. That's the last up candle before we got a structure break to the downside, our shift to the downside. Here, same thing. Last bullish candle before we got a market structure shift to the downside. Here is our first high manipulation into supply. Then we start to see price move lower. Does that make sense? So think of manipulation as, not manipulation, think of first low and first high as the magnet. Or think of it as gravity. Yeah, that's a better example. Think of it as gravity. So price is pulling towards the first low or first high, and then we're really running to a supply zone or a demand zone. And then we want to see price move from there. So let me see. There was a stock we were on that made me want to talk about this. I just can't remember which one it was. Okay, here's an example. This is our highest point. It came from this low. What's this blue line represent? Yep, market structure shift to the downside. Now, what does this candle here represent and why? Yep, supply, because this is the last bullish candle before our market structure shift. So as price comes down to make this low, you can see here we ran all the way up to the supply zone before pushing back lower. Oh, yeah, okay, here it is. This is what I wanted to show you guys. And this is the only reason I brought it up. Here we have a structure break to the downside. Right at that blue line. There's our lowest point. So we can see we have this bearish range from here to here. Here we can see this is our first high. So price runs up, manipulates first high. We pull back, we move higher, and then we dump. Where did we dump from? Supply zone. Manipulation into supply. Then we got the dump. Is it starting to come together? So we want to wait for price to go to a supply or demand zone, ideally. No, we're not going to get to entries. We've talked about a lot today. We'll save entries for another day. I don't want to overwhelm you guys. Now, if we were on a 1 hour, and that's, as you can see, this is on a 4 hour. That's why I always say start off on the 4 hour first. Because if you just went to a chart and just went to a 15-minute time frame, it's going to be pretty hard to understand where it is. That's why I always say just start on the 4 hour, because it's just going to show you the bigger, obvious things. So if we see price right over here, and let's say on a lower time frame, we're like, oh, price is bullish, price is bullish. We need to see, okay, we're bullish, but up until what point? Oh, I see we have this big supply zone. This price comes up here, let me be cautious. Kind of like that. Let's go to Apple. We only look for, no. So you start on a 4 hour, then you see what you have. Then you go down to a 1 hour and 15 minute to kind of like refine what you have. So with Apple, we are in a bullish range until we break this low, structure break to the downside. Our last bullish candle is here. Before we got that shift to the downside. Here's our supply zone. And this is in a 1 hour. So if we go to a 4 hour, we can see that's a little bit of the next stuff. So I'll save that for later. We have supply zone here. Price runs up to supply, dump. Runs up to supply, dump. Please mark the first high. So on a 4 hour, our first high is going to be right here. And we also have another first high because we made a new low right here. So right here, first high into supply, and then we fell lower. So then like on a 1 hour, there's the low, here's the first high. So we'll take this off. Manipulate first high, push lower. For this one, let's see. Yeah, that's a clean, but we'll get into this later. Because supply and demand zone is just one. Think of like when price is in a bullish or bearish range, there's multiple, as I told you before, there's multiple areas at which price can go to use as a trampoline. We can have one here, we can have one here. It's just understanding if we're gonna go here and push, or if we're gonna go here and push. So our job is just to wait for price to get here and then go down to lower time frames to find certain things that'll confirm if price is gonna push down from here or from here. See if we can find some more examples. 1 hour time frame based on where Tesla is here. Break to the downside. Supply zone is here since that was the last bullish candle before we got that break. Let's go back to XRP. All right, so just as we found before, this blue line is our first high manipulation. we can see we have a structure break right there. The last bullish candle is right here. Supply zone, push lower. First high manipulation into supply. Let's look at Ethereum. Highest point, there's our shift to the downside here. The last bullish candle before that shift to the downside is here. There's our supply zone. Here's our first high. So here you can see with Ethereum, and we also have first low here. So we can see we had a first low manipulation, our first low placed here, made new highs, shift to the downside, placed the first high, came all the way down to manipulate this first low, which sent us all the way up to manipulate this first high, right into the supply zone, and then we started pushing lower. So this is just an example of price just moving to, just kind of acting like here. We're just moving in between. So as you can see, in between a first low, first high, we're not doing much. As we manipulate first low, now we're starting to get a move. As we manipulate first high, now we're starting to get a move. So first lows and first highs is what gives price the initial push, and supply and demand zones is where it actually moves from in a more precise manner. Can we get another example of a demand zone? Yeah. All right, so here's another bearish range. This low to this high here. So our last bearish candle before we got that first high break, which is also technically a shift to the upside, is here. That whole black candle here. So that would be considered a demand zone. Yeah, we went over quite a few things today, so don't be concerned if you have to watch this over a few times. Jesus, does everyone see what I mean by like this price action just being very ugly? Like all throughout here, sideways movement. Pretty much all throughout here, sideways movement. Yeah, the first couple months of the year is always pretty choppy. Let me see. I'm gonna look through my archives to see if I have any cleaner examples I can use. Just give me a quick second. All right, I'm gonna share my screen. Actually, hold on. Let me put this in our chat. Give me 1 second. Alright, here we go. Wait, what the heck? Where's your screen? Alright, can you guys see my screen? Alright. Okay, so this here, demand zone, last bearish candle before we got that push up, manipulation, price comes down to manipulate it, just about taps into demand zone, not quite, but then we get our push higher. Here, demand zone, first low manipulation, price manipulated it into demand, and then as we left demand, clean move to the upside. This whole candle, this whole black candle is the last bearish candle before we got that push up. There's the first low, wait for price to manipulate first low, we tap in demand, then we push higher. Over here, same thing. Push up, demand zone, first low, wait for the manipulation to happen, tapped in demand, clean move higher. Is that why you build your positions in your videos? Yeah, sometimes. So like, sometimes what I'll do, because as you can see, not every example, like this right here, we did not tap demand, but we pushed higher. So sometimes what I'll do is I'll start, so instead of like buying a position in full, so let's say you got $3,000 to trade with. And let's say we have a demand zone here. Let's say we have first low here. So sometimes what I'll do, we're not gonna go too in depth in this, but I'm just gonna show you just so you can kind of understand a little bit of it. So sometimes what I'll do is as we manipulate it, our first low, I'll start buying a position here. So I'm not throwing the whole 3,000 in just as we manipulate. I might throw in like $500. And then as we start getting to demand zone, then I'm starting to buy more. And then as we leave, then I'm starting to buy more and just kind of adding on to the position. Because we could have an example of where we go like this, and then we just shoot up. Whereas if I was only waiting for price to go down to demand zone, I wouldn't have caught this trade. But instead, I could have put $500 in this trade and then caught the move. Yeah, I didn't get to put my whole position in because we didn't really go down to demand, but at least I was able to play some of the trade. So just kind of like that. And then the same thing applies to if this was supply. So sometimes we might not go all the way to supply and we just dump. So I'm starting to build a position as we are manipulating it, approaching supply. So I might throw a couple $100 in here. Then as we get up to supply and start leaving it, then I might put more money in. But the reason why I trade open is because this is where the volatility lies. So if like right before open, we're like right here manipulating it, we might open and have a clean bullish move up and then just a nice clean dump. because we have volatility for market open, kind of helping price play out towards the actual setup, rather than if this was like 1 p.m. in the afternoon, price is obviously going to move slower. Yeah, we'll get to that. What's a signal that lets you know if price is going to break through supply zone? So if we were looking at this and let's say, boom, we manipulate it, and let's say we're just continuing higher, just continuing bullish structure. If we don't get any shift and price is just continuous bullish structure, like there's no trade for us. So just because price gets to a supply zone or to a demand zone doesn't necessarily mean we're gonna dump our fly. And that's why I say there's other things that we have to figure out before we take an entry. This, just identifying where the supply and demand zone is, that's just the first step. All right, let's look at this Trump coin. Oh, this is in reverse, that's why. Yeah, there's not really much to see here. I understand to be confused with new information, but I hope those who lost take notes because we should have to move at a slow pace before I'm gonna go back. Yep, I agree. Trying to think of just like some random charts or coins to go off of. Gold. I haven't looked at that in a long time. So gold here on a weekly. First low manipulation. Demand zone right here. As you can see, this example, we did not come down to tap demand. And then we just moved higher from there. And as we can see over here,